Original. And I'm in love with the money.
Thank you so much for joining. We are talking about something that's often misunderstood but is so important: life insurance. And I'm hoping that your takeaway from this conversation is that you have options when it comes to protecting your family and your financial future. So, we're going to just dive in and break down what your options are in this talk. So, life insurance is not a one size fits all, nor is it a one and done. Depending on your goals, your risk appetite, your current financial situation, and even your age, there are different types of coverages that might suit you. So, let's start with the most basic. The most basic is the term insurance. Term insurance is, as it says, is temporary coverage. Very straightforward. You can get coverage for, say, 10, 20, or 30 years, and your premiums are set for that period of time. If something happens during that 10, 20, or 30 years, a death benefit will be paid out to your beneficiaries. Why people tend to like a term policy is that it's affordable. But since it's temporary, you do want to ask certain questions, especially when it comes to down the line. So you have lower premiums initially, but when the term ends, whether it be 10, 20, or 30 years, expect that your premiums will go up. Questions to ask when looking at temporary or term coverage is figure out whether it's renewable and convertible. You might have the option to convert it to one of the more permanent policies, whether it be whole life or universal life, that we'll dive into in the future. A term policy, I like to call it a no excuse policy, because if you need coverage, there is no excuse not to have it because it can be affordable. For example, a term 10 policy for a 35-year-old male for $1 million, non-smoker, good health, can be under $40 per month. For a female, good health, 35-year-old, non-smoker, $1 million, term 10, could be under $30 per month. So again, this is my no excuse policy for you to get your family protected. The other option is a whole life policy. This policy is designed for a lifetime. It's designed to last you your entire life, as long as you keep your side of the contract and continue to pay your premiums. The other extra that a whole life policy offers is the cash value component, which means a portion of your premium goes to building your cash value. This cash value component is managed by the insurer when you have a whole life policy. And over time, you'll be building up this cash value and you'll be able to leverage it in the future. That means you'll be able to borrow against this cash value. Some whole life options offer what is called a bonus or a dividend, which is the return into your policy. Now, people like a whole life policy because it's a long-term solution. The coverage is also, it's not just coverage, you are also able to build wealth over time. This is, a whole life policy is more suited to individuals who are risk averse and like the guarantees that are built into a whole life policy. And especially they don't want the need to manage the policy over time. So it's more like a set it and forget it type of policy. So if you are risk averse, you want guarantees inside of your policy, and you have a lot of cash to stash, this might be a good policy for you. Because of the guarantees and the significant management required from the insurance company and others, it is more expensive compared to the other options available to you. So the other option is a universal life policy. Similar to a whole life policy, this offers you lifetime coverage and also has a cash value component. The difference, it is more flexible. Universal Life gives you the option to choose or self-direct the investment portion of your policy. And also you have the ability to change this over time. You can also adjust your premiums and your coverage as needed. It's a bit more hands-on though, right? Because of course, with the self-directing of the investment portion, you also have the responsibility to monitor and manage this policy, which means at least once per year, more often if you want to, but definitely at least once per year, sit down with your advisor to go over your policy. So universal life policy, I would say, would be more suited to somebody who's more aggressive with their investment outlook, and maybe they have unpredictable income. Maybe they're self-employed or they're a business owner. They have a longer time horizon, and they are okay with having that amount of control and direction over what the cash value component is invested in. You can also leverage this type of policy in the future for policy loans, so you can pursue other opportunities as well. So, quick summary. A term policy is just temporary coverage. It's simple and straightforward. You pay for a certain amount of coverage for a certain time frame, and you pay a certain amount. For the permanent options, you have the cash value component. So it's not necessarily a conversation about affordability. It's more a conversation about your goals and objectives and what you want the policy to do for you. Permanent policies, whole life and universal life, has the advantage of giving that cash value, the growth of that cash value, tax shelter. The tax, that growth is tax exempt or deferred, and you do have multiple ways to access this cash, whether it be by withdrawal, a policy loan, or a collateral loan. Each option would have different tax implications and implications for your death benefits. So this is definitely a conversation you'll want to have with your insurance advisor. So here's this thing. Whether you're just starting out, you're building your career, or you're wanting to build a legacy for your family, or you're planning for retirement, there is a life insurance solution that suits your situation. The key is understanding what is important to you, whether it be affordability, whether it be a tax strategy that you're looking to be able to grow your wealth tax-free and access it in multiple ways, including tax-free ways as well, or you're wanting to build a legacy for your family. You need to have a goal in mind, an objective. And guess what? It's not either or. You can layer both permanent and temporary options to suit your varying needs and objectives. So if you still have questions, I know this was a blast through the 3 options. If you still have questions, that's okay. You don't have to figure it out all by yourself. You can reach out to a financial advisor, an insurance advisor like myself, and have that conversation. They can help you, or I can help guide you through that process and answer any specific questions that you have. But please note, it is a process. And to help you make good decisions when it comes to life insurance and your other financial goals, your advisor will require a comprehensive understanding of your current situation, your goals, and your objectives, and as well as your approach to risk. As I mentioned before, it's not a one and done. It is an ongoing conversation, one that you'll have with your advisor as your life changes. Certain triggers might be a marriage, a birth, a divorce, retirement pending. All of these conversations you will want to include your insurance advisor in. So if you have any questions, please feel free to post them in the comments. Reach out to me directly. You can reach me at info@moneymattersca.com or at 647-951-6905. Remember to like and subscribe so you can keep up to date with whatever is coming out, tips, surrounding your finances, your insurance, and just building wealth, protecting what matters most to you. So until next time, stay informed, stay protected, and remember, you do have options.